Hey guys, how are we doing on this glorious bearish day? How many paper hands in this channel gave way to fear and uncertainty, and how many diamond hands bought and held the dip? These are some of the top questions science still can't answer. So, finally the market is reacting to the ongoing situation with China's Evergrande group. The Dow dove 900 points, Nasdaq sliding like crazy and the S&P falling over 2%. The entire market was bleeding, with energy sectors being hit the worst, with financial groups and basic material companies not being far behind. It's about time we started noticing a reaction, anything, in this market that seems to diverge from reality more and more by the day. There are two things that are of notice surrounding the Evergrande situation. The situation is absolutely ridiculous, and now it's actually spreading over to other developing companies in Asia. I also have a bit of an update on how the phenomenon of meme stocks is starting to trigger a bunch of restrictions in corporate America. A day will not go by without the 1% putting all efforts into crushing the little guys trying to make a buck. My YouTube statistics say that most of you click off these videos about halfway. As such, I want to take a moment before we start to make some important statements to you guys. Things are going to get tough for everyone holding meme stocks. They are about to get emotionally taxing, mentally draining, and many will be challenged. I know this will come off as an annoying message to some, but I ask that you give me a chance to explain. The market, inflation, global economy, housing market, and everything in being challenged. We might start seeing companies as well as some retail investors liquidate their positions. This could come as a reaction to overall market sentiment, and companies wishing to have cash on hand to invest in other assets. We know that apes are strong, but not all that trade meme stocks are here to stay. People trade for a variety of reasons, and this will reflect on the price. The best and only strategy that hedge funds have is to make meme stocks as unappealing to investors as they possibly can. They will dip the price more than it should when they can, and they will try to maintain the stock trading sideways in order to drive out volume or potential investors. They will entertain them with other stocks, some which will be pushed out by the media, in order to deviate funds away. This is not to say we are about to experience an unprecedented dip. This is me telling you guys that when I say you need to detach yourself from the daily chart, it's not a joke. Unless you are looking to buy, the red charts are often psychological tools as of itself to demoralize you. Citadel and the rest of financial institutions pay a lot of money to bring in psychologists that help them construct models that trigger certain reactions from investors. Right now, things in the overall economy are not looking good, and the government has done really well to ensure that the markets don't reflect this reality on the charts, but this can only last so long. At some point in time, a market correction will come. Today is absolutely nothing compared to what is going to happen, so be sure to keep your chins up, stay focused on the goal, and stay in full conscious awareness of what is taking place. We might jump high tomorrow, or we might go down 20%. Nobody can't rule anything out because the only constant variable these days is uncertainty. I tell you this now not as a warning of something that might happen imminently. I was heavily criticized months ago when I said the squeeze is not necessarily going to happen this year. I told you guys yesterday this week I saw us getting checked, with a bear trap in place and dip looming when everyone else is screaming get ready to launch soon. I am the king of unpopular opinions in many ways, and that's because I care as much about these stocks as you do, and I cannot lie to you to give you a sense of calmness. I am a very real and direct type of guys. Some days are going to be ugly, and some days are going to be nasty. Some days will be weird, and some will be bullish. Expect a full roller coaster full of surprises in the coming weeks and months. Again, let me clarify that this is not me telling you guys to get ready for a huge dip. This is me telling you to strap yourselves up for volatility and changes. This is me telling you to work on your mental fortitude, because I think the night will get darker before the morning comes. I will be buying every dip because I know based on all the analysis done that we own the float, and that this market is a ticking time bomb, and I believe to the core that GameStop and AMC are the best hedge against everything in the market. Stay zen, stay unemotionally attached to the daily chart, and focus on employing a working strategy to buy the dips and hold if that is what you want. I figure I should have said this before I said all that, but let me quickly disclose and state that I am not a financial analyst or advisor, and that all contents discussed in this video are provided as opinions. All efforts are placed to better understand the nature of the current market in anticipation of the greatest squeeze in financial history. Everything presented is evidence I collect, and all opinions are based on research, experience, and knowledge on the matter. Shout out to all my Patreons and one-time donors, whose contributions continue to carry this channel forward. Thank you so much to all that have taken a moment and the burden of throwing some love my way. It means a great deal for the longevity of the channel. You guys are the absolute best. Let's finally start with today's content. First thing of note that we have to discuss in relation to Evergrande is that the media is making it all seem like the situation recently got out of control. I have been talking about Evergrande here and there for well over a month ago. I caught on to this and was preaching warnings like people holding signs saying the end is near. I saw this coming a mile away when most of the media was hush hush. But it comes with no surprise that they would be all ignorant and secretive around this, because speaking of danger on Wall Street is a huge no. Especially when you have rating agencies holding AAA ratings, which is the highest bond rating you can give, to Evergrande just a couple months ago. The rating agency, China Changxin International, as recent as September 15th, noticed people that the bond's rating had finally been downgraded from AA to simply A. There is no greater sign of entire market manipulation when you have a company with a liquidity crisis that was known months ago still being rated high. The fact that it is still rated A is the best evidence right now that nothing in the market can be trusted. Funny enough, back in 2008 when the Great Recession took place, one of the reasons as to why the everything fell apart was because rating agencies were giving great ratings to trash bonds. You might ask, how is this even allowed to happen? Anyone with a mere wrinkle and a modicum sense of morality or balance in life will ask why are trash companies like Evergrande, who are $300 billion in debt which they cannot pay, still afforded high ratings? To this, I will ask you to sit down and listen to me very closely. Do you think it possible, knowing all you know by now, that we are living in a completely fraudulent system? The system is set up so that they can bundle and cherry-pick information in order to accredit high ratings, even for a company that is sinking everything out there in the entire world. You will ask for a more entertaining answer, a more logical and factual base to understand this problem, and I nor anyone else can afford you one, because the system isn't based on a strict guideline by which everything moves as perfect harmony. If a credit agency doesn't grant a company the bond rating that they want, the company will simply walk down the street and ask another credit agency to give them the rating they want. Eventually, a company will give them what they want in order to get compensated for it, and every other agency that preferred to abide by reality will go out of business because nobody will take them. It's that simple. Let it marinate in your head for a bit. Second thing you need to know about Evergrande is that this chaos is not exclusive to Evergrande alone, and no, I am not talking about every other asset having a dip in their valuation. I am talking about Cynic Holdings Group Corporation, a Shanghai-based developer that lost 87% of their share value today alone. I kid you not, the stock went from trading in the low $4 last week to reaching 50 cents today. The company has a $246 million bond due on October 18th, and they also happened to be revised last week and given a negative outlook for its future. The sell-off comes in that seeing how the Chinese government hasn't saved Evergrande as many had speculated, common sense dictates that there is not a lot of hope for this one to last either. As such, everyone was selling today, as there is no real hope for this one. Yet goes another developer company into the trash can. To be honest, I am applauding China in not saving any of these. Executives have reportedly mismanaged, lied and fraudulently tricked investors and their own employees so that they could secure their own assets. Being politically correct, these people deserve to rot in jail and be made an example of to the world, especially to America, since in this country we instead opt to reward such behaviors. My politically incorrect opinion is too unpopular to be shared on social media, so I will keep it to myself. GameStop was making news again, news that made me really happy. The company announced that as many as 500 new jobs are coming to Broward County in Florida. The meme stock giant stated that it is building a new call center and operations hub expected to be operations by the end of this year. Glad to see GameStop adding value to this economy and expanding, as I was under the motley fool impression we were going out of business by the end of the year. They had so many experts tell me to see that I, in an act of rebellious and defiant dullness, opted to show the world how slow I am and bought the stock. Now I am sitting at very comfortable gains, while they and their friends sit atop losses totaling over $6.5 billion year to date so far. It pays to eat crayons, fellas. And the war is now being exacted on us precisely because of this. The meme stock phenomenon ravaging across the globe, bringing profits to people, has prompted potential restrictions in the world of corporate America. You guys know how a couple of days ago we covered the news about Mass Mutual being fined and agreeing to pay $4 million after settling a litigation with Massachusetts securities regulator. This fine came after the company was busted for not properly supervising Keith Gill, otherwise known as the Roaring Kitty. Gill's actions violated Mass Mutual's social media policy, prompting some goofball named Anthony Chukwuma to make this statement. I think it's pretty straightforward. Mass Mutual should have been a lot more clear with their employees in terms of what they could and could not do. And quite frankly, it's not like Gill was in a financial advisor role. I'm guessing it never even crossed his mind that what he was doing was even a legal gray area. Much less, strictly prohibited. I think I lose brain cells quoting Anthony. You see, Roaring Kitty never gave financial advice. He exercised his First Amendment and gave his opinion that GameStop was heavily shorted and that it presented a great investment opportunity, which has been true. He never told people that they had to buy GameStop. He simply shared his own opinions on his own social media profiles. God forbid you have an opinion these days that goes against what Wall Street wants you to buy. You will be out of a job faster than you can ask if you can get unemployment. The reason I bring this up is because the mongrels of the financial world are all slowly creeping up to challenge the First Amendment. This isn't the first time we have talked about some financial company not liking people speaking their own opinions about stocks. We have seen clowns at CNBC ask Gary Gensler, the SEC chairman, if he thought retail investors had the right to get together and buy stocks. They called it manipulation too, which is a carefully handpicked word. They are slowly building up a case with precedents to eventually take this to courts, just watch. If you think you are safe from all of this because you do not own meme stocks, you are about to get a surprise. Let's talk about today. The Fed reported that reverse repo operations for today resulted in over $1.224 trillion, setting a new high for the highest reverse repo operation in recorded history. AMC's dark pool transactions accounted for 64% of the total volume, while GameStop dark pool transactions accounted for 45% of the total volume today. According to Fidelity data, buy order flow for AMC was bigger than the sell order flow, with GameStop's buy order flow being almost 3 times as big as the sell order flow. Now, let us finish up with a recap of today's performance. AMC traded bearishly today, losing over 8%. The stock had a substantial drop in the pre-market. It would eventually start running upwards close to market open. However, its bullish rebound would not last, falling again from 43 to 38.53. Right before the markets closed, AMC experienced a run-up, closing at 40.29, below the VWAP. As for what I expect for tomorrow, I think if the market doesn't experience another sell-off or bad news, AMC will bounce back. To say this stock is oversold is an understatement. AMC holds support at 40 and at 38.50. It has resistance at 41.50, at 42.24 and then at 44. Hope you guys bought this dip today. GameStop traded bearishly today, losing over 6%. It opened to some stability, holding above the VWAP for a while. However, the market sell-off eventually got to it, and GameStop fell back down to 184.55. It would experience a bounce back that led it to a closing price of 192.20, right on the VWAP. As for what I expect for tomorrow, I think GameStop has a good chance of bounce up. Today's fall was as a direct consequence of the overall market. GameStop has support at 184, 188 and 192.50. It has resistance at 196, 199 and 202. Stay bullish, people. This dip was a gift for all those who have been waiting for a good chance to buy under 200. And that is all we have for today. I want to thank you guys so much for making it to the end of the video. Today's big question is, do you guys believe humans are inherently good or bad? Can't wait to see what you guys have to say. If you want to help this channel, I have provided links which will be in the description for donations or even a monthly pledge of whatever amount you want. These donations do go a long way in helping me be able to pump videos out. Remember to follow me on Twitter if you haven't already. I will see you guys tomorrow on the next one, and until then, stay vibing and chilling. Enjoy the rest of your day and to the moon.